Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This is all my own original work, as I think you deserve to have that. So with that, New York coffee. This market until this past August had been the story, just about, of two bearish pitchforks. First one was breached thrice and repaired thrice, but broken finally on the top side 4 weeks ago, and is now off my daily chart completely. Second pitchfork was the more recent, a larger early February to late April bearish Andrews pitchfork. This one likewise was broken and is now also off my daily chart. Okay, so as I said 3 weeks ago, and I quote, looking below, we have a congestion area at the moment around the flatlining short medium moving average, currently at 317.60, between that's actually now, but back then it's between 309.90 to 312.85, containing the 50% Fibonacci line of the May 24 to February 25 move at 310.80. Below this, we have a large stratified series of supports starting at 290.85 and stretching down to at most 252.25. End of quote. Now, the reason I mention these, what are now levels well below, is that, as I've said 3 weeks ago, and I quote, one new pattern's developed and two new patterns have started to develop. The easiest to see is the possible monthly key reversal we have on the cards for August. End of quote. Well, this pattern has developed into a monthly key reversal up for August. An interesting development, and it may not be as bullish as it first appears. You see, I carried on back then, I quote, the second possible pattern, and this is not as clear here as it is in London coffee futures, but we might have formed a June or possibly late April to date descending scallop pattern. This looks like a backward letter J. So, J on my daily chart. We now need to watch out to see whether the market turns lower or heads higher, as I suspect this pattern is coming to a climax, and would then be able to give some idea of the move either higher or lower. End of quote. This pattern has become more real in recent weeks, with the peak of the upswinging inverted letter J coming, it seems, 2 weeks ago. This pattern is now worth close observation, as there are now some key levels to watch for and potential moves as a result. For the moment, I'll give only the primary potential moves, as it just gets too complicated. Now, the reason for this is I am still not sure whether to measure from the height of the early June high or the higher late April high. That being said, we have a confirmed move higher, and by that I would need at least two consecutive closes over the 391.30 area. Then a smaller potential high would be plus 49.75 cents higher above that, and a larger primary move higher would be plus 73.90 cents above that. If, on the other hand, prices drop down to the base of the action and we have a confirmed move lower below 276.75, then the smaller primary move would be down 32.5 cents lower than that, and the larger primary move would be down 48.35 cents lower than that. Please replay this, take your time to get your head around these. Just keep a watch on where the market goes, either over 391.30 or under. This descending scallop pattern is the only pattern remaining, as the second pattern mentioned, the quad pattern, has already fulfilled its targets on the upside. Now, there is something else I'd like to look at here, and for this I am indebted to Ray Bradbury for asking me about New York coffee 6 months ago, 26 weeks ago, and I went at the time to look up my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had been not immediately obvious to me at the start of 2025 when I earlier reviewed the longer term charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom, a bright red neckline on my daily chart, currently at 275.95. The break higher over this neckline reached its primary target on the upside, but there was a secondary, much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line at 433.75. That's actually quite close in the scheme of things. Prices did indeed turn lower at this key combination of the 100% projected Fibonacci line and the target of 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20, below the higher of May 2011 at 308.90, as is below both the dark blue upper time, currently at 388.40, and a dark blue middle time, currently 312.70, of the interesting 2019 to 2023 bullish Andrews Fitchhawk, the breached bullish Andrews Fitchhawk. However, in July and again in August, the market started to form a base on top of the bright red neckline. As I say, it's currently 275.95. August, with its monthly key reversal up, raced all the way up and back up to the dark blue upper time, piercing it, and ended up actually closing right on it. However, since then, the market has pulled back away lower from the dark blue upper time, but not too far as not to be affected by it. It all was, as I said 3 weeks ago, and I quote, "The market has rejected pressing further lower through the bright red neckline. This is a key neckline and one that will decide the future of this market for many months, if not years ahead. I continue to monitor the market's longer term reaction to this bright red neckline that's below." End of quote. London Coffee. 19 weeks ago I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. This overhang of bearish pressure and ammunition is important, as it started back then to press lower, heightening the impactful force of the break below an older, shallow, large bull channel. That's the primary target on the downside in the 41.64, and the secondary hard to reach target down at 35.15 zone were both reached, leaving a tertiary much harder to reach target down in the 28.60 zone, which is now obviously retired. The rise seen throughout August pushed up through some significant resistances, now turned into supports. Notably, the trio of interesting 50% Fibonacci lines for the November 21 to February 25 move at 38.08, the May 21 to February 25 move at 36.49, the March 20 to February 25 move at 34.89, plus the congestion of the 61.8% Fibonacci lines at 41.68, 41.87 and 42.90. And also the declining mauve medium moving average, currently 42.21. However, we have some resistances that had been breached but now resumed once again as resistances topside. Notably, the 50% Fibonacci line for the February 25 to date move at 45.05. The gradually dipping gold long moving average, currently 44.10. And the lesser Fibonacci line at 48.22. But above all these, and capping the market, was and is the February to date downtrend, currently at 49.39, which was only just touched before the market came off again. All this recent action highlighted two patterns, one complete and one still in progress. The complete pattern is the mid-June to mid-August rounded bottom that has reached all its topside targets. The incomplete one is one to watch closely, as it has climaxed and is quite a big pattern. It is the late April to date descending scallop pattern. On this pattern, the market hesitated on the previously mentioned February to date downtrend and is now heading lower, significantly further developed here as a pattern than in London here than in New York sugar. This hesitation is the crest of the inverted J curve that makes the descending scallop pattern. Now the theory now indicates a move back down to the lows of July, where we would see a break lower. Something in the order of minus $904 or down to the 23.56 zone once the market overcame the low of 31.60 seen in July. This, by the way, is only the primary potential. I won't call it a target, not yet, but it is still quite a large move lower to swallow for this market. Now, the only issue of this is that this move lower might be a false break. And for that, I suggest keeping a closer eye on things in case prices start to turn back up again. As I've said earlier, the pattern is similar to the one seen in New York coffee futures, but it's a lot clearer here in London coffee futures. I now await further developments.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.